So this is a personal opinion of mine. I
Yes,
think
of course.
when you're a young person, the best investment path is to bet on yourself rather than bet on a coin. But if it's completely financial, if we look at the last year completely in crypto, there are three big trends that have come up, right? One is crypto AI. Another one is RWAs, real world assets. And the other one, funnily so, is meme coins. Now, at Polynomial, we don't actually be partial to any of this. We have markets for each of these sectors. If it's RWA, we have Ondo as a market on Polynomial Trade. If it's memes, we have tons of memes on our exchange. If it's crypto AI, that is also served. In especially in terms of crypto AI and RWAs, we are having projects being worked on right at this moment. But coming back to your question about financial literacy and investment, I think compared to 2021, 2024, we see a lot more people are more educated about financial derivatives as such. Um, this industry actually grows a lot year on year. And I think for a user getting in right now, it's best to just take the top market cap coins and buy a basket of them. In terms of if I have any specific recommendations, I don't think I'm a financial advisor as such. But just like me, I'm betting on the industry. And if you think this is a space which needs growing or you think it'll grow, it's best to just go for a basket or an index.
Yeah, I'm curious about, and even you told that derivatives is a bit harder than just invest in some tokens or just like do even like futures on Bitcoin on different indexes, for example, long or
Mhm,
short Bitcoin, for example.
mhm,
It's
mhm,
a bit harder, but it's possible to jump into even this like instruments.
mhm.
So I wanted to know your opinion. Are these instruments like derivatives and there are more features how you can make some money are becoming popular? And do you see a potential of these instruments?
Um, so what I'm understanding is you want to know if there are new strategies that are coming up, which is really good for investments. Is that right?
Not only for investments, just for making money, but because even like crypto exchanges are involving different features for making money. So like, do you see a potential of these new features, or it's only for people who has like experience, for example, 10 years in crypto?
Um, no. So I would say a lot of strategies are packaged already as products in crypto right now. So,
Mhm.
for example, one of the biggest products to come or protocols to come out last year and the year before is Ethena. Essentially, what they do is uh, they have funding rate apps running on their platforms where users can just go in and passively earn the yield, and they will do all the work behind the scenes. So it doesn't really need a user to have a lot of experience, where there could be service providers providing the same. There's a bunch of strategies that have come up, and there's also real world assets itself. So let's say you know nothing about finance today, but you could have yield from treasury bills today, right now on chain. You could have yield from funding rate right now on chain. So I don't think you need 10 years of experience in crypto as such.
Yes. So how do you see tokenized real world assets impacting DeFi?
Mm, tokenized real world assets is, like I said, one of the biggest trends last year.
Mm-hmm.
And I think this is something which can grow a whole lot in the coming years. I remember reading something by Standard Chartered the other day saying that today the RWA market is $20 billion in how big it is, and by 2024, just a decade, it could be 30 billion. And I kind of share the same uh, view on it, because essentially what real world assets is doing is that it's kind of globalizing the access to any of the assets that they offer. Let's say treasury bills, right? Before, treasury bills would be bought by big institutions or maybe US citizens. Today, with real world assets, anyone around the world can go in and invest in real world asset, that is a treasury bill, and get the yield. And this is further shown by the fact that today, as it is right now, stable coins account for 1.8% of all total US debt. So, we are actually driving the space forward, and real world assets as such have a lot more ground to clear. I think it would even reach a lot higher percentage of total US debt as it goes forward.